Hello and welcome. Our guest today is Patrick Lowe, WTO Chief Economist. We'll be discussing the 2007 trade figures. Patrick, welcome.
Thank you very much.
World trade expanded again in 2007, but at a slower clip than 2006. Why was that the case?
Yes. In 2006, real trade growth was 8.5%. In 2007, it fell to 5.5%. Mostly this was because of a slowdown in import demand in the industrial countries, linked in no small measure to the rise in commodity prices in oil and food, particularly oil. I think that, of course, the opposite side of this is that the countries who have been producing these commodities have seen their exports expand dramatically, so as course of their import growth. But on average, taking the picture as a whole, I think that what the developments in the major markets with respect to import demand are largely behind these reductions in trade growth.
Do you anticipate that this deceleration in growth will continue into 2008, and are many of the same factors at play?
Yes, I think it is going to continue. The rate of trade growth is going to continue to fall. We're predicting an export growth rate of 4.5% in real terms for 2008. And this prediction is based on a number of downside factors. It's based on today's information, but there are a number of downside factors which may well influence this estimation in the months to come. I'm thinking particularly of the effects of the financial crisis, some of which have certainly not fed through into the real economy in many parts of the world, fears about inflation, business uncertainty, and continuing rises in commodity prices.
Let's talk about one commodity specifically, food. Food prices have risen by 48% since 2006. Have you been factoring specifically the agricultural price increases into your overall projections? And to ask you a more specific thing, what role does trade have in addressing this problem of rising food prices and the crisis that has brought about?
My suspicion is that oil would loom larger in the story about the trade numbers. But to answer the other question about the role of trade in relation to what can trade do in the face of what's becoming an increasingly difficult situation in some parts of the world with respect to availability of food and food prices, I think that the immediate solutions to this problem don't really lie in trade as such. Trade is going to become more important as you look at the medium to long term. And I think first and foremost, open trading arrangements play a significant role in smoothing markets, in getting food to where it needs to go, in making sure that there's as much efficiency as possible in food production. So I think that's an important role that trade plays, and I think that's an important part of what we're trying to do in the Doha round. But I think there are also a couple of other things going on in the Doha round which are significant in this context. One is the provisions on food aid that are being negotiated. Should these come through, they ought to help to get food aid to where it's really needed. They ought to make sure that food aid doesn't substitute for commercial production. And I think we should also bear in mind that an effective approach to aid for trade could really be a significant factor in releasing supply constraints for production. And that also is something that the trading system, to the extent that aid for trade is part of the story, could really do something about.
When you look at trade flows, generally speaking, how have these soaring commodity prices affected those trade flows in terms of demand, in terms of nominal figure growth? What would be your assessment of these rising commodity prices in terms of the general trade picture?
Well, as I say, I think that the rising commodity prices have been partly responsible for the drop in trade performance in 2007 compared to 2006. And I think that of course, there are those who benefit from this. The commodity exporters are doing very well. But overall, this has clearly had a dampening effect on trade growth.
Do you see sort of new sources of possible growth, new engines of growth as a result of the accumulation of capital that's come in these countries through the higher prices of commodities?
I think that clearly where commodity prices have gone up and the countries that produce and export these commodities have seen their export earnings rise considerably, that this has gone into capital accumulation. There's been a considerable growth in sovereign wealth funds. This, I no doubt, will help to reduce some of the credit crunch that is being experienced in other places, other parts of the world. But of course, these are things that are somewhat outside our area of expertise. But I think that the short answer to your question is yes. What happens on commodity prices has the two sides to it. Right. It's the exporters who benefit, as opposed to the importing countries who have to pay higher prices, take terms of trade hits.
To raise another matter, which is not strictly in the portfolio of the WTO, exchange rates. Clearly, the fluctuation of exchange rates has an impact on trade flows. And what has that impact been over the course of the last year, and how do you see that unfolding?
Well, I mean, we've sort of couched this issue in terms of what the changes in exchange rates, relative exchange rates, has done to the situation of global imbalances. And it's clear that the weakening of the dollar has helped to reduce the US current account deficit. But the story of the euro isn't so important in this particular context. I mean, the euro has strengthened. Of course, that has helped European economies deal with higher import prices. But in Asia, the currency appreciations haven't really been reflected yet in any reduction in the ratio of the current account surplus to GDP. And
of course, even with the strong euro, Germany remains the world's leading exporter of manufactured products.
Well, it's had a growth rate of 20% this year in exports, and yes, that keeps it on top of the list.
Not bad. Services. Growth in commercial services has consistently outstripped that of growth in trade for manufactured items. Is this a trend that's likely to continue?
Well, actually, it hasn't really been a consistent pattern. Last year, 2007, we saw, in current dollar terms, we saw services increase by 18% as compared to merchandise, which increased by 15%. But that hasn't been the pattern in the last couple of years. And it's not clear that this pattern will continue, partly because of the effects of higher commodity prices.
One of the interesting statistics to emerge from the report is the fact that developing countries have seen their nominal figures in terms of exports go up, but also their relative share. They reached 34% of world trade this year, an all-time record. What does that portend for developments in 2008?
Well, I think that the pattern that we've seen emerge, where the growth of trade in developing countries accounts for more than 50% of overall growth in trade, is one that's set to continue, certainly this in 2008 and perhaps beyond. Again, partly a commodity-driven story, but also some developing economies have been doing rather well in a broader sense. But this is a very mixed picture, because some developing countries are doing rather well and others not.
How much of a factor is the rise in commodity prices in this?
I think it's a very significant factor, but it's not the only one, as I said, because some developing countries have been doing very well quite independently of what's happening to relative prices.
Least developed countries, their exports rose by 16%, and their share of world trade is at its highest since 1980. Does this indicate that perhaps trade is becoming more of a tool in terms of development and poverty alleviation strategies?
Once again, it's a very mixed picture. There are some least developed countries that are doing well in terms of developing their non-traditional export sectors in labor-intensive manufacturers, things like textiles and clothing. There are other least developed countries who are doing extremely well because of oil, and then there are others who are not doing very well at all. So once again, it's a very mixed picture, and I think it's quite difficult to make general observations about least developed countries as a group.
Patrick Lowe, many thanks.
Thank you very much.